Complacency is at record levels right now. It's at levels that are seen once in a decade, and it's not a good time to be bullish. It's definitely a good time to be bearish and have some hedges on. And like always, charts predict the news. Whenever markets get this complacent, we end up having a correction because very conveniently, some bad news shows up. All right, so let's take a look at what I'm trying to see here. In red, we have the put call ratio, and in green, it's the SPX. So this put call ratio has been smoothened out. It's a 10-day SMA, so it just makes the signal a little more cleaner. Now, what we saw recently in May was so the put call ratio in red, it hit levels which it had last seen in 2021, and prior to that, it's a very rare signal, right? So this level of complacency, let me just show you. So this is the level here, right? The red line. If I go back, you can see it was seen last in 2021, which was um, the top over here, extremely close to the high, and that led to the bear market in 2022. So this is the power of this signal. Um, and then, of course, prior to that, so in 2020 and 2021, it did not exactly work because the put call ratio was what it saw in that 1 year was something that had never been seen before in history. So you had a few false signals. But prior to that, because this was a very different world, this phase of 2020 and 21 was a very, very different world. So I'm kind of like ignoring this phase here. Prior to that, this signal was just before the COVID crash. You can see here, this was the top in Jan. Market went a little lower, pushed a little higher, and then we got a monster crash, right? Prior to that, if we go a little further back, it was in Jan of 2018. And if some of you remember, what we got after that was the Volmageddon event when the VIX absolutely went through the roof. So, yes, in terms of price wise, the SPX only dropped about 10%. But if you notice in all these scenarios, right, you had Volmageddon here where the VIX went through the roof. You had the COVID crash in which the VIX went through the roof, and you had a solid price wise correction of roughly 35%. And over here in 2021, you had a bear market, which I'm sure it fell about like 25% or so. So that is the type of signal you get it once in a few years. And now, and then very closely, right, almost touched this level in Feb of 2025. And then we got the 20% tariff sell off, right? So now I've looked at 4 data points, right? And all of them have led to very big VIX spikes. And as well as that, at least a 20% sell off in stocks, right? This was almost a 20% sell off in 2025. This was obviously a bear market. The COVID crash was also a 20% sell off, more than that. And 2018, not so much, but it still resulted in a VIX spike that was record breaking, right? That's why we called it Volmageddon. So now, coming back, now that I've given you the backdrop, um, here we are today. All right, here we are today, and we got those levels in May, and I think this was the high. So, what do I expect if history repeats? Well, like I said, at least a double digit sell off in stocks, right? Maybe a bear market, right? Maybe something like the 2025 sell off, or maybe something like the Volmageddon, where it's only about a 10-15% sell off, but VIX goes through the roof. So that's what I'm expecting, right? Just if history repeats, that's what we can expect. So at least a double digit 10 to 15% sell off, which would kind of bring us back down to the March lows, right? It's at least got to go there if history repeats, and very conveniently, a catalyst will show up, right? That's how markets operate. When everyone is bullish, very conveniently bad news shows up, and when everyone is bearish, very conveniently good news shows up, right? So I am very bearish right now. You can see the indicators nowhere close to being any as high as any of these signals. And when it does get pretty high, I'll be back here making another post telling you that it might be time to start building some longs. All right. So that's just the put call ratio, right? It's a measure of sentiment, but you have to keep in mind that in addition to this, the rally that we've had post March, right? So from this so little 10% sell off that we had, this rally in April, May has broken some records, right? This has been something for the history books, this rally, right? So at the very least, we should at least see some sideways chop, some time wise correction, if not a price wise correction, right? So betting on a further upside at this point is betting against a move that like has never happened in history. It's a very stupid thing to do, in my opinion. You anyone who's bullish right now really doesn't understand statistics, right? Sure, it can go higher, but the odds of that are close to zero, uh, going by history. So, yes, maybe it pauses for some time and then the rally continues. Sure, that's possible. That's definitely possible. But we need to first see some sideways chop, right? We need to see if we see something like this, sure, fine, we got our correction. But until we don't see that, I can't say it's time to be bullish, right? If we see this indicator go back up, some fear comes into the market again, sure, then we can go long. And it's not like I'm completely bearish. I do have some stocks that I am bullish on, but I'm talking from the index level right now. And especially the semiconductor space, that's where I do have more shorts. All right, I'm going to leave it at that. Thank you, and please leave your feedback down below.